Hello all, Namaste and welcome back to your daily dose of Market Vision series. Before we delve into today's trading session, there is a significant geopolitical development that India conducted a targeted strike across the border into Pakistan and Pakistan occupied Kashmir, damaging the entire infrastructure of the terrorist organizations across 9 locations earlier today as part of Operation Sindoor. This was a response by India for the Pahalgam terrorist attack. So we surely carry the risk of retaliation from Pakistan, which could inject a high degree of volatility and uncertainty into both domestic and global markets. So traders are advised to remain vigilant and factor in potential risk adjustments to their open positions. Now let's analyze how the Indian markets fared today amidst this backdrop. Despite the looming geopolitical uncertainty, the Indian equity markets exhibited a degree of resilience, managing to close into positive territory after navigating intraday fluctuations. Let's break down the performance of key indices. Indian indices inched higher. The Nifty 50 index concluded today's trading session at 24,414 levels, registering a gain of 34 points, which translates to a modest increase of 0.14%. Similarly, the Sensex ended the day at 80,746 levels, adding 105 points or 0.13% to its value. This suggests a cautious optimism prevailed despite a drop of almost 1% in the morning trade. So let's see how the major sectors performed today. The auto sector emerged as the top performer today, registering a robust gain of 1.66%. This strong showing could be attributed to positive sales figures across the automotive industry. Tata Motors, Bharat Forge, and Mahindra have been the top performers. The realty sector also maintained its upward trajectory, adding 1.12% today. Factors such as sustained demand in the urban centers and ongoing infrastructure development could be fueling this positive sentiment. Raymond, Brigade, and Godrej Properties rallied today. The metal sectors also displayed strength, gaining 0.98%. APL Apollo, Hindustan Zinc, and Hind Copper were the top gainers in today's trade. In this uncertain period, the defensive sector should outperform. Despite that, pharmaceuticals and FMCG stocks experienced selling pressure. The pharma sector declined by 0.33%, while the FMCG sector saw a dip of 0.52%. Now let's talk from the perspective of global landscape. International markets are keenly awaiting the cues from the upcoming FOMC meet in the US. So Asian markets displayed mixed signals today. Japan's Nikkei was down by 0.14%. However, China's Shanghai Composite showed positive momentum, gaining 0.80%, while Hong Kong's Hang Seng saw a marginal increase of 0.13%. European markets exhibited a more cautious stance today. German's DAX registered a decline of 0.757%. France CAC saw a more pronounced drop of roughly around 0.91%, and the UK's FTSE also traded in negative territory, down by 0.38%. US markets are trading slightly positive. Dow Jones climbed by a notable 0.61%, and S&P 500 also trading in the green, up by 0.17%. However, the technology heavy Nasdaq trading with a slight loss of 0.25% due to the uncertainty prevailing ahead of the crucial FOMC meeting. Commodities are trading mixed. WTI crude oil is currently trading at $58.38 per barrel, marking a decrease of 1.20%. Safe haven demand boosts gold and silver. Gold surged by 540 rupees, closing at a notable 99,000 per 10 grams. Similarly, silver witnessed an even more pronounced increase, adding 2,100 to close at 99,000 rupees per kilogram. So this surge likely reflects investors are seeking refuge amid the prevailing geopolitical tensions and the anticipation of potential market volatility due to war kind of scenario. Now let's talk from the perspective of charts and open interest. What do we expect tomorrow to happen? Tomorrow being the Nifty 50 expiry, so markets today have in fact converted its downward trajectory to a positive momentum. So as you could see, the markets opened almost like a 1% downfall was seen, and then post that we saw immediate support that had emerged at the lower level. So as we had discussed, at every lower levels there is some buying momentum that is happening. Even today, despite the negative news of the terrorist attacks by India in the Pakistan region, so despite that, we did see a volatility in the morning trade, but then there was a swift recovery that had come in, and towards the end of the day, market actually turned into positive and closed in green. So the candle, if you look, it turns out to be like bullish Marubozu. So now from here on, if tomorrow the Nifty opens positive and trades beyond this previous resistance level of roughly around 24,500 odd, then we might significantly see the up move coming in on the Nifty. However, since there is an FOMC meeting, and in case if there won't be any rate cuts, then we might see some sliding that could come in on the US markets, which would lead to lower opening on even Nifty. So for us, this 24,200 to 300 odd levels, what was the low today, that would act as the immediate support. In case if you see this level getting broken tomorrow, then we might quickly add to the sell positions and continue our selling momentum for the entire day, despite a kind of volatility that is expected due to weekly expiry on Nifty. So overall, the resistance for us would remain as 24,500 odd levels, and the support would remain as 24,200 odd levels. So when we see that gets broken out, we have to take sell call positions, and in case if markets open positive and trades on the higher note, then we can go long beyond 24,500 levels only. So the immediate resistance for Nifty would remain as 24,800 odd levels. Now let's see from the perspective of open interest what it suggests for tomorrow. So we could see significant build up that has happened at 24,400 odd levels on the call side. So we also see previous days to weeks open interest positions at 24,500, which always have been remained strong. Despite Nifty tried inching towards 24,500, there was no reduction in the open interest positions on the call side. So this suggests that even tomorrow, despite some positivity being there, this 24,500 odd level would act as a strong resistance and will not let it to cross beyond 24,500, as that would be a selling pressure that would emerge from all the call writers. At all the higher levels also, as you could see, there is some slight open interest positions that have got built alone yesterday, alone today. So we have to see how the trade could expect tomorrow. If the US markets are gets closed on the negative, then we might also open negative and trade below 24,500 odd levels in the range of 24,000 to 24,500 odd levels. So this would be the range for tomorrow. So first support would come at 24,200 odd levels, because that was the level from where we immediately saw buying interest coming in today's trade. So if that gets broken out tomorrow, then we might approach towards 24,000 odd levels alone for tomorrow's trade for 8th May expiry. Now talking from the perspective of put call ratio, it is overall trading at 0.9, which is positive, and at the money it is 0.65, which is slightly neutral to bullish. On the Sensex as well, we see a strong green candle that had formed from the lower levels. So that means at around 80,000 odd levels, which was almost the low for today. From there, we saw good buying that had emerged in the morning trade, and significantly after just 5 minutes of trade, we started inching up and closed at the extreme higher level. Though we were unable to close the previous day's high, but still this still indicates the positive momentum that could come in tomorrow. Simple trade for tomorrow will remain if in case Sensex crosses 81,000 odd levels, we could turn bullish and trade positive. And this 80,000 odd levels would act as the immediate support for us. If we see breaking 80,000, then we can take positions for sell call, and then from there on we can continue as long as there is no positive momentum that comes in. So major chances are that we might trade range bound tomorrow in this overall range of roughly around 800 odd points, from 80,000 odd levels to 80,800 or maximum 81,000. So this is what the tight range that we are expected to trade even tomorrow. So any channel on the either side, once it moves, then we have to cut down the positions of sell if it moves positive, or if it is trending negative, then we have to cut down the long positions and continue with the lower trajectory. Now let's see from the perspective of open interest. So at the higher levels, somewhere we could see on the call side, the open interest positions are getting unwound and moving towards the higher strikes, that is 82,000, then 82,500, and significant open interest positions has been seen at 83,000 odd levels on the call side. So these positions, not sure if it is genuine ones, so we will wait for a day's time and then conclude whether those have been the real open interest positions or it's false. So if we look from the perspective of tomorrow's trades, so 80,500 remains strong support, which is also a round level figure, and then the next immediate support is at 80,000. So since we have been trading for a very long time in between the range of 80,000 to 81,200 odd levels, so even tomorrow we might see the trading happening in the same range between 80,000 to 81,200. Immediately once we see these levels are broken down, then we might move up at the higher levels beyond 81,200, and in case if the lower trend continues, then below maybe 80,000 odd levels, we might see a downfall coming in on the Sensex, and we could approach towards 79,500 odd levels as the immediate near term downtrend. So overall PCR is trading at 1, which is positive to bullish, and at the money is also 0.92, which is again bullish. Now let's see from the perspective of Bank Nifty. So Bank Nifty was comparatively positive to the other major indices, and it had we can say this as a bullish kind of piercing candle, where 50% of the previous day's candle has been covered. So at times this suggests a positive and could reach towards the previous day's high, and from there on we might see a trending move to come in on the higher side. Else if tomorrow it trades again in this zone of roughly around 600 odd points, then there are high probabilities that we might trade on a downward trajectory. So for us, the immediate support is going to be at 54,000 odd levels, from where we actually saw this recovery coming in. In case if we trade tomorrow in this range, then it is better to be prepared for the trades on the downward trajectory rather than taking longs. For us, the range to add longs should be somewhere at the 54,800 to 55,000 levels. Once it crosses those levels, then we can go long and take positive trades for 56,000 odd levels as the immediate first trigger, and then beyond 56,000 levels we might approach even 56,500 or 57,000 odd levels. So 54,000 remains the crucial support zone for us, and this should be tracked for the trades to take on the downward trajectory. Now let's see from the perspective of open interest. So even on Bank Nifty, as we discussed, we are trading in the tight range between 54,000 odd levels to 55,000. So once we move or cross beyond these levels, then we might see some positive trends in case if it closes above 55,000 odd levels to move beyond, and then if it approaches towards 54,000 odd levels or closes below that, then we might see some strong open interest positions getting built on the call side at the lower levels. So here we already see some additions that had happened. If it starts trading lower levels, we will again further see open interest additions getting added on the call side. But for the higher or maybe far strikes, if you see at 53,000 odd levels, we see some 30% open interest positions got unwind. Similarly, at the higher levels on call side, at 55,000 odd levels, we see put writing unwinding that had happened, though it is not great, but yes, slight unwinding that has been seen. So there is some pessimism at the higher levels for Bank Nifty to move. Similarly, there is some optimism from the call writers immediately when it is approaching towards the lower levels. So we see some unwinding that had happened at 53,000 odd levels, though we are almost 1500 points away from that zone. So for us, the immediate two crucial parallel lines would be 55,000 on the higher side and 54,000 on the lower side. Once it gets broken, we will see downward journey, and if it goes higher beyond 55,000 odd levels, we will see some positive momentum coming in, and then we might move higher. So on the PCR front, we are at 0.8, which is bullish, and at the money also it is trading at 1, which is again positive. Lastly, on FINNIFTY, in fact, FINNIFTY is quite bullish compared to Bank Nifty or any other major indices. So, in fact, it had given a bullish engulfing kind of candle. So, this candle is positive as long as tomorrow it starts trading above this level. So once we cross beyond 26,200 odd levels, we will turn positive on FINNIFTY, because we almost traded with a negative pattern for almost 10 odd trading sessions. Hardly you could see 2 to 3 green candles in this. So there was some negativity that we had seen across 10 odd trading sessions, and now that we have consolidated from the higher levels towards 26,000 odd, and then we have seen some good positive moves that had come up from 26,700 odd levels from today's low. So now if it starts trading beyond 24,200 odd levels, we should consider FINNIFTY as a positive trend and go only with the long positions. So as long as it trades tomorrow in the consolidation zone, we should not touch and wait for this 26,500 odd levels to cross. The first trigger would be 26,200. Once that gets crossed, then we can expect easily 26,500 levels to approach as the first target, and then subsequently we might move towards 26,800 to 27,000 odd levels. So compared to all the other indices, FINNIFTY remains quite bullish and strong. Now let's say from the perspective of open interest. So as we had discussed even yesterday, despite that negativity coming in, we could see unwinding happening on the call positions at the lower levels of 26,000, but there is some addition that we had seen on the put writing. So this suggests that at every lower level there is some support that is emerging in FINNIFTY, and there is buy happening, which is leading FINNIFTY to move or not close below 26,000 odd levels. So as long as FINNIFTY trades above 26,000, this remains as the crucial strong support for us. And then there are high possibilities that if the positive trades emerge, then we can smoothly cross 26,500 as the first target on the higher side, and then beyond that there is no resistance for us until 27,000 odd levels. So we might swiftly move once FINNIFTY crosses 26,500 odd levels on the higher side. So lower side 26,000 remains crucial. On the PCR front, it is 0.8, which is positive to bullish, and on at the money it is 1.02. Despite the higher wicks, we have not been seeing any selling pressure on the Indian indices. In fact, it is building a strong foundation at these levels for the higher level movement in the maybe short-term scenario. So let's see how the trade is expected to be for tomorrow. Now, from the perspective of FII proprietary traders and retail traders data. So FIIs on the index futures after a very long time have turned positive, and they are holding 500 open interest positions on long side. So this is a kind of turnaround trend which might continue over the higher levels, and this is quite positive because all this while they had been holding roughly around 2000 to 3000 or maybe at max 5000 odd points sell future positions. Now they have turned to positive and gone long from the existing shorts. On the stock futures, they continue to add further positions and have 18.56 lakh open interest positions on stock futures, which is again quite bullish. On call options, they have added longs with 30,192 contracts. On put options, however, they have taken shorts at 13,625 contracts. So net net, if you see, they are long here and also they are bullish here. That is when they have taken shorts. So that is when we are holding overall longs of 43,817 positions on the index options on from the FIIs. So FIIs are bullish. Proprietary traders, on the other hand, are majorly added 13,457 contracts on the short side. So this is substantial because all this while they were holding very few short positions, but this additionally got added to almost double the positions of the yesterday's positions held. So there is some information that maybe proprietary traders have, which is either missed by FIAs or from the other market participants. So overall they are net short on index futures. On stock futures, they hold minimal positions of 2.73 lakh contracts, which is still okay. On call positions, they are long with 1.49 lakh contracts, and on put options also they are long with 32,000 odd contracts. So net net, even proprietary traders are bullish with 1.16 lakh contracts on index options. Now let's see from the perspective of retail traders. So retail traders have added additional positions and they are holding shorts in index futures to the tune of 21,800 odd positions, which is quite high. Maybe retail traders are expecting FOMC meet to be negative and no interest rate deductions happening due to inflation and uncertainty across the world markets. So if that happens, then there could be some negative positions or maybe sell off in the US markets that might happen, and that could immediately prevail on the Indian markets, because already on the local standpoint or local news, we have been trading negative, and then after that, if even FOMC disappoints, then we might see a further downward opening on Indian indices. That could be one of the rationale for the retail traders to add new positions on index futures on the short side. On the stock futures, they have been holding long with 16.04 lakh contracts, which suggests they are quite bullish. On the call options, again they have held 1.79 lakh contracts on shorts. On put side, they have again shorts with 71,000, roughly 72,000 odd contracts. So net DIIs are short with 1.07 lakh contracts. So proprietary traders are actually betting against the clients or retailers. Similarly, even FIIs are doing the same. So let's see from the perspective of cash market, what is the status. So despite the war kind of situation that had intensified in terms of the political news today, despite that, DIIs have bought for 2,378 crores in the cash market. Similarly, even FIIs have bought to the tune of 2,586 crores in the cash market. So this very evidently suggests that when these big institutions are carrying long positions for the next day, so there is nothing that should trigger us to go short on the markets. So overall, yes, tomorrow's trade is going to be crucial from the perspective of Nifty expiry and also from the perspective of US rate cut decision. So as long as we do not see any of the retaliation coming in from the Pakistan for today's strike from India, till then we might continue with the positive momentum. In case if the geopolitical news further starts affecting us, then we might see some underperformance coming in, typically from the perspective of Indian markets. So overall, I think it has been positive for the Indian markets despite all the geopolitical concerns and the mixed global cues. So we have to cautiously trade for tomorrow because of lot of external factors and news on which we are depending. So if tomorrow's trades remains positive, that would give us a further trigger for the next week's trades, and also some expectation that we might turn into the positive approach after a long consolidation of almost 10 days trades. So that's it from our side on the today's market movements and update. So just give your thoughts as to what do you expect from the potential impact of the geopolitical situation. Are you on long or have you been taking the short positions? So comment below to this video, so we will also see what kind of positions that you have held. So if you found today's analysis helpful, please like this video, subscribe to our channel for daily market updates, and hit the bell notification so that you don't miss our next video for tomorrow. So until then, trade cautiously, and we will see you in the next video. Thanks all.